Hi everyone, it's Jamin Kirkwood from Secure Financial Management with your August 2017 economic update. So today I want to share with you a couple of things that we're watching with our investment management side and also a couple of concerns that clients have brought up to me recently. I want to share my thoughts on that as well. So first, to start off with looking at July and even so far into August, it's been pretty quiet with the markets. We've had a couple of volatile days recently, but it's been pretty quiet, and historically that's pretty common of the summer, especially towards the end of summer, July, August. Now, the reason that they say that that August in particular is slow is they say that all the traders in New York are actually vacationing in the Hamptons this time of year. Now, I don't know if that's true or not. It sounds right though. Some of those traders would be vacationing in the Hamptons. So anyway, that's a theory on why it's so quiet. Historically, what we'll see is that as September starts to roll around, the trading activity will pick up, and that can also mean the market can become a little bit more volatile. So that's something we'll be watching. On the economic front, a couple of key indicators I want to talk to you about is firstly inflation and also unemployment. So unemployment is still doing great. It's down to about 4.4% now. It seems to be hitting new lows, which in unemployment is great constantly. That's great news for the economy. Something else that's happening though is inflation. Inflation really can't seem to get any steam behind it. It ticked down a little bit recently to 1.6%. Now, a lot of you might be wondering, why do we care about inflation being low? Isn't that good because it keeps the price of goods down? Well, there's kind of two sides to that coin, right? Yeah, it's great for us as consumers that prices stay low, but keep in mind, many of us are invested in the stock market, which is obviously made up of companies. Now, those companies, they want to be able to make profits, and the more they can charge for their goods and services, the better the profits it can be, which means better returns, hopefully, we should get in our investment portfolio. Now, while inflation remains low, they can't raise those prices. They can't get any margin on their investment. So inflation is kind of one of those things where you really need it in a sweet spot. We're a little bit too low right now. We don't want it much over 2 or 3%, but movement in the inflation up to maybe a 2 to 3% target would actually be a little better for the stock market and for businesses. It would show that there's pricing power. It also shows that the economy is pretty strong too, because if businesses are able to price goods higher, that's indicating that there's a lot of extra cash in the economy. People are employed and being paid well, and it's a good indicator that the economy is starting to do well as well. So a couple of things looking globally that I wanted to mention to you is, for a long time, for the last several years, the main economic driver in the world, the main market that's been doing well has been right here in the US, and we're still doing fine, but what's great news is that other areas of the world are starting to pick up as well. In particularly Europe and emerging markets are really starting to perform well, and this is a great sign because to get real true global growth, it can't be just us. It can't be just the US economy going out there and proceeding and moving into a growth territory. We need other elements in the world as well. We need Europe, we need emerging markets, we need Asia to come in and kind of basically pull their share, pull their load, while we're all trying to get GDP to go higher and obviously economic expansion to go higher as well. Now, before I close out here for August, I want to share with you something that I've been talking to clients about recently. Actually, I just got out of a client meeting and we had this discussion. There's been some concerning things going on recently, right? North Korea has been an issue that we've been looking at for a while. There's been various domestic issues here in the US happening as well. And I want to talk about that in relation to investing, okay? When we look at investment management, we're trying to basically have a portfolio that's as well risk adjusted as possible. We look at a couple of different things. One's called non-systematic, and the other thing is called systematic risk. Okay, non-systematic risk are things that we can gauge and we can try and build our portfolio around. So I mentioned inflation a little while ago. Inflation and interest rates tend to go hand in hand. If we see inflation moving and interest rates moving, we can start to adjust portfolios to try and handle that. We can start to diversify that. Maybe we can get out of some utility positions, we can get out of some bond positions and rotate into things like consumer staples, things like that we can try and we can gauge inflation, we can gauge interest rates, and we can try and help movement around that, right? But there's certain things in this world that we call systematic risk that we can't plan for. It's a part of life. The North Korea situation is great. Things that have happened in the past, like September 11, they're all considered systematic risk, right? It's risk that exists that we're never going to be able to get away from, and we're never really going to be able to plan for. it's part of life. It's always been a part of life, and it will always be in the future, and it's something that we have to accept with investment. So when we think about our investment portfolios planning for the future, be aware that that risk, as much as we don't like it, it's a part of our lives, and there's a certain element to it that we can go ahead and we can control and we can try and monitor, but there will always be a part of it that we can't do anything about. The only way to avoid it is to not invest at all. And for most of us, that's not really an option. We need to have some sort of strategy, a strategy that deals with the risks that we can, and also deals with an element understanding that there's risk that we just will never be able to do anything about and will always be a part of our lives. If any of these things that have happened recently are concerning you, I encourage you, as I always do, give me a call, send me an email. I'm happy to talk about any specific concerns that might be affecting you. You can call the office here at 210-428-6250. I'd be happy to discuss that with you. Now, before I close off, I just want to remind you again, obviously, that nothing that we talk about here should be considered an investment recommendation. To discuss your personal situation, give us a call here at the office at 210-428-6250. I'd be happy to speak with you.